Hello, my name is Mike Swanson, and I run the website WallStreetWindow.com. Now, the odds are you're watching this video because you found out about it on my email list. Now, if you're not on my email list, you want to get on it so you can get all my future market updates. Do that by clicking the link associated with this video. Now, I've not done a video like this on YouTube now since New Year's, January the 1st, 2020. I went and checked, but I've got to do a video because of what is going on in the past week in the financial markets. Now, that video I did though on New Year's was about gold. And I thought at the time that gold would be one of the best things to have money at work in 2020 because I thought it would beat the market. And it's done that. As you can see from this chart, even though gold fell $75 on Friday, along with the stock market and everything else except bonds, gold is still up year to date. Gold is still above 1550, which was a key resistance high broke earlier this year. But gold beat the stock market in 2019. Gold's been outperforming the stock market really since October of 2018. But last year, the GDX gold stock ETF went up about 39%, while the S&P 500 went up only 27%. And I believe that outperformance will continue this year also. But I know what's on everyone's mind is the big tumble that took place in the stock market last week. And if we take a look at the Dow, it indeed has the look of a waterfall decline. There's no doubt about that. Very nasty situation. In fact, the stock market averages are down approximately 15%, so 13, 15, somewhere in that range, the various averages from the high. But a drop like this, there's some comparison that can be drawn to what happened in 2018. The Dow fell sharply off the high almost instantly that year around February, but that was a 10% drop. This drop's bigger. Of course, in 2018, the markets fell 20%, but there were some days of such intense selling this past week that I had not seen since 2008. So if we think about what happened on Thursday when the Dow fell 1,000 points, there was an attempt to rally off a big gap down in the morning, but then it failed and the selling intensified into the close. And one of the things I want to explain to you in this video is why that selling happens. Because I know all the news stories this weekend and the past couple of days have been about this coronavirus. I don't frankly believe the situation is as bad as it's being made out to be, but it doesn't matter. The stock market tumbled, and what you need to realize is that the drop is not just about the news, but momentum. Just as momentum can take the stock market up, it can also take the stock market down in reverse. And when you see a market have the type of day it had on Thursday, in which it's already fallen dramatically, almost 10%, it was, and then it has a failed rally during the day and then collapses on the close, what is taking place is there's a lot of forced selling happening in the markets. doesn't even matter what the news is, because there's margin calls going out, and people getting those calls are forced to sell, and that's what creates a selling of such intensity. And I had not seen a day like that really that I viewed in such dramatic fashion since 2008. Now, the good news is such for selling also usually creates bottoms in the market, or at least an end of a decline of the type we saw last week. And if we look at this hourly chart now of the S&P 500, you can see that in the last few moments of trading on Friday, a massive volume came into the S&P 500, and there's a nice move up into the close, even though the S&P 500 still finished down the day 0.82%. It still had, a lot of buying coming in the close, which would suggest that we should see some follow through to that in the coming week. And also that something that suggests that the stock market should rally from here is the action in the VIX. The VIX is the so-called fear volatility index. Some people call it that. But what it actually measures is the premium that people are paying in the options market to buy puts and calls, a premium for volatility. And there are people that, when the market falls, the way it did, they don't want to experience further losses. And instead of selling stocks, there will be people that buy puts on their positions to hedge. And when these people do that in mass, it can drive the VIX up to elevated levels. And that's exactly what happened last week. In fact, the VIX is still at an elevated level. And key bottoms in the market typically happen when the VIX goes above 30. Well, the VIX still on the close Friday is even above 40. But you can see in 2019 it got over 35. 2018 it got over 42. So we've seen the type of fear that typically brings bottoms in the market. The market should rally. But that doesn't mean it's going to go up straight up, or necessarily even immediately. The most likely scenario is some sort of stabilization in the stock market will take place after you've had the type of drop that you had last week. The market averages are still below critical support levels of their 200-day moving averages. But if we think back to what happened in 2018, when the stock market fell straight down in a matter of days, roughly 10%, the market then spent several weeks going sideways. The volatility continued. You still had some big up days, some big down days off of the lows. In fact, the lows were tested, even briefly broken for a few moments. So I think this is the sort of action we can now expect in the stock market for the next few weeks. Some sort of continual big up and down days, but not, much more downside from where we are, if any. But it's still going to be some wild swings that take place. But I think we're going to see a market rally because of what is taking place in the global economy and the stock market. Treasury bond yields have tumbled, and that is going to set the stage up for interest rate cuts from the Federal Reserve, which are going to, at some point, traders are going to focus on that and wanting to buy into them, once things settle down. So that's where we are. Ultimately, this is also another reason, though, to expect gold, silver, and mining stocks to do well, because they benefited greatly from Fed cuts last year. They will do that again, and then after the cuts is going to come massive quantitative easing style operations from the Federal Reserve. All that is a topic for future videos. But I just want to tell you, after what's happened last week, the stock market should rally here. It should stabilize and then rally. I know it shakes you up. It shakes everyone up that gets hit by waterfall decline in the Dow. And we do have to be alert. Is this a sign that the overall structure of the stock market is breaking down? That's not something we can come to that conclusion at this moment, but we now have to keep our eyes open to see how things unfold over the next couple months and so forth. And we will do that together in future updates. Again, if you're not on my free email list, click the link associated with this video, get on that list, and I'll be talking with you later.